$4,000, almost $400 gold, $4,300 at the time recording. How good are you at spotting when a parabolic asset hits its peak? There are always signs of mania, and the one asset at the center of the attention right now, of course, is not Bitcoin, it's not tech stocks, although Nvidia is getting pretty crazy too, but it's of course everyone's favorite shiny old rock, gold. But is the great gold bull run of 2025 finally running out of gas? Well, certainly the risk reward is not really there for aping into gold right now. Perhaps more importantly, why is gold catching such a relentless mega bid this year? And what is it shouting about where the markets could be heading next? So let's break that all down to understand how the gold chart is flashing some huge warning signs for us, plus what that means for other assets like Bitcoin. Let's start off with gold's insane inflows here. It's been an absolutely wild year, a couple years actually for gold. What I'm talking about here is that gold funds have received an incredible $34.2 billion in inflows over the past 10 weeks, pushing gold up to a market cap worth over $30 trillion. That's crazy. For anybody who says Bitcoin can't go to $1 million, are you paying attention? This is the first time, by the way, that any asset has ever reached that kind of valuation. To put that into crypto context, gold has increased its market cap by double the market cap of the entire cryptocurrency market in just the last 2 months. 2 Bitcoin market caps. Plus, we've also got silver putting in a matching run, hitting a new all-time high of $50 to achieve a market cap close to $3 trillion, catapulting it back up above Bitcoin, and reinforcing, of course, the narrative in favor of traditional hard assets. And this is because we are currently in a situation right now where central banks outside of the USA, they're going crazy, man. They have positioned more of their international reserves into gold than into US treasuries, with levels at a point not seen for almost 3 decades, which offers a lot of confirmation that demand for gold is policy driven. After all, it's the people who end up deciding the monetary policy. You know, people at the central banks and stuff, right? Not regular people, but the central bank people, and they're buying gold, right? They know, they actually decide what will happen next. So the big question is, what is gold telling us right now? And we can summarize it like this. Gold moves in advance of major changes in monetary policy, meaning, very importantly, for investors, it also tells us what all the other asset classes are going to do next. Now you can see, if you look back in the charts here, how other assets react when gold has its sort of blow-off moments. From May 19 to August 2020, gold rallied by 64%. This was in advance of extreme money printing. That later period of QE, which gold had foreseen, then saw inflation kick back in and other assets, energy, commodities, stocks, crypto, they went on huge runs. At which time, gold entered a period of sideways movement, massive consolidation. The price drew down, having already completed its rally for the year before everything else. Gold moved first, everything else followed. So let's look at where we are right now. Gold has rallied by 170% since November 2022 to new all-time highs just below $4,400. People are literally lining up in the streets to buy physical gold. Okay, it's happening. Mania is here. And as for what central banks are actually seeing or planning down the line, the ticking time bomb, of course, is the sovereign debt crisis. And the likelihood is that central banks will deal with the problem by printing money, because it's kind of what they always do. And to be fair, there hasn't been any announcement from the US Fed in particular about any kind of QE, but the ending of QT, sure, great. Now, QE, money printing, this in turn equals sustained inflation and higher asset valuations across the board when it comes. Some central banks are already doing it, but the US, again, to be clear, is not and doesn't have any plan to do it currently. But this comes after gold has completed its run that these things start happening. So the next question is, has gold peaked? Well, before we get into that question, will you continue trading on platforms that don't reward you, or is it time for you to upgrade to an OG exchange that puts major money back in your pocket just for signing up, making a deposit? Well, Femex delivers on everything that serious traders want. They got the deep liquidity, they got the fast execution, worldwide availability, meaning available to anyone, anywhere. You might need VPN in some cases. The rewards are insane. For a limited time, when you make your first deposit of $5,000 or more, you're gonna get $1,000 cash back. Man, put in $5K, get $1,000 back. That's a wild bonus. And it doesn't stop there. This month, new and existing users also signing up through the link right down here can earn up to 1 whole Ethereum in rewards worth almost $4,000 at the time of recording this video. Anyway, will you take advantage of this rare opportunity? Link down below, go check it out, sign up today. So back to the question, has gold peaked? Look, we saw how in 2020 gold hit its top and then consolidated. Right now we have some clear signs of retail mania. Those queues in the streets do not look like buy signals to me. Okay, $30 trillion. Gonna take a lot of money to double gold from here. We may be seeing gold topping out or getting very close to topping out here, okay? Now, this doesn't necessarily mean that gold's gonna have a major crash, but it will probably pull back in price to some extent. It looks pretty overstretched right now. But at the same time, after its run up from 2019 to 2020, it consolidated basically sideways. Either way, though, we might be at the end of the absolute wild upsurge that's been going through. And if gold is sending a message, as it did before, about central bank policy and money printing, that means that other assets should be primed to rally in response to the conditions that gold is currently warning about. And yes, that in theory should mean Bitcoin. Now, to be clear, we've just had a very large traumatic event in the entire cryptocurrency market that fucked a lot of people, okay? We can't ignore that. There's some real trauma that happened. But that trauma eventually will heal, and when it does, the macro conditions are there for us. After gold peaked in 2020, Bitcoin experienced around a 20% correction, found support at the EMA 21, and then rallied hard through the end of 2021. Now, Bitcoin has already just gone through a similar drawdown, has bounced back up towards the EMA 21, which it needs to close above, of course. So what we're potentially looking at here is BTC as the catch-up trade now. That means Bitcoin follows along after gold has marked a major macro peak. You can also see how gold and Bitcoin appear to almost kind of take turns, with Bitcoin laying low when gold breaks out and then rallying while gold slows down. Usually there's anywhere from a 80 to 100-day lag between the big moves here. And if that pattern continues, then Bitcoin can rally soon, keeping in mind, of course, the broader macro outlook with loose financial conditions, rate cuts coming, all that stuff. The environment looks very primed. Now, does this mean it's guaranteed that gold peaks here and Bitcoin runs next? No, of course not. Gold can keep rallying. Maybe we go up to $5,000 before this thing cools down. I would not be shocked. But again, the risk reward of buying gold here is extremely limited, where the risk reward of buying Bitcoin here is much higher. No two situations are ever identical, and the past does not indicate the future, but we can definitely see rhyming patterns throughout history. So for sure, even if gold climbs farther, eventually at some point it's going to cool. But even in that case, it would still make sense if history rhymes and other assets follow along later. But this would then happen a little farther down the line, perhaps. A clear caveat when it comes to Bitcoin in particular is that if you refer to the 4-year cycles, which I'm still very skeptical of, then 2020 isn't supposed to match up with 2025. And it's true that when gold peaked in 2020, BTC was still 40% below its previous all-time high. So they're not exactly the same situations, very different now on Bitcoin's current position. But the caveat to that caveat is that the current cycle already looks different to previous cycles. And the bigger and more mainstream Bitcoin gets, with more institutional adoption from BlackRock and all these other players, the more unlikely it becomes that the 4-year halving cycle will exert such a strong influence. Of course, we've talked about this extensively here on the channel, so make sure to also read the newsletter, keep up to date with all the latest insights and this kind of stuff. But look, link down below, by the way. But the point here is that BTC is a macro asset now, and that means it should line up with the macro environment. And that in turn means that where gold leads, Bitcoin should in theory follow. The only question is, how long is it going to take? Thanks for watching.